Alright, good afternoon everyone. Today is Wednesday, the 7th day of August 2024. So, hopefully everybody's doing well, and that Hurricane Debbie, my sister's name is Debbie. Hurricane Debbie is not stopping too many of you from trading and doing all the things you need to do in your normal lives. It's going to be here the next couple of days, so I had to put my boat up today. But, here we go. So the things that I want to cover today. First, there are some basic things that I got to cover right at the beginning for anybody who is new here. Now, there is a question box for you all to ask questions in, and I want to encourage you to ask the questions. Okay, I want to encourage the questions. Is this weekly for TV traders? It is a weekly meeting. I'm trying to do it weekly on Wednesdays at 3 o'clock, Joan. So this meeting I'm trying to do weekly at 3 o'clock. For everybody that's a TV trader and anybody that's on the trial and anybody that is considering becoming a target view trader. Now, if I just take that off the chart and let me close that, you see the alerts that are popping right down there. So I did add alerts to it since the last meeting. I did add alerts, and the next thing that I'm going to add is notices, which will be a pre-alert notice. That's the next thing that I'm going to add. Hopefully I'll get that done by next week's meeting. I'm not sure that I'll be able to, but I'm going to try to. Alright, before I get too deep into it, let me say this. Again, welcome. And if you have not taken the trial with us, go here to the home page at Target View Trades. The trial is right here. Alright, it's very inexpensive to get started. It's 10% cheaper if you do it on the monthly. It's more than 20% cheaper if you do it on the annual, but most people are doing the monthly. Some people are starting out with the weekly just to get a taste, and then they upgrade to the monthly. That is fine if you want to do that. Just gonna let me know. Once you get going, just let me know, and we'll switch you over. We just time it just right so that when the weekly runs out, this one will begin. All right, I'll send you a link and we'll work it out so we can time it all just right. This is how you take the trial. It's pretty simple. You must have TradingView charts to take the trial. But you must have TradingView charts to take the trial or do this at all. I only put this on TradingView. I'm not putting it on anything else. All right. I know a bunch of people asked me to put it on NinjaTrader. I'm not putting it on NinjaTrader. I only want to be responsible for keeping track of code in one place, and I expect we're going to have, over the years, we're going to have lots and lots of people, and I only want to have to change it in one place at one time. In the other stuff that I do, we have it in 15 different places. And when I make a code change, if it's a code change that's outside of the TradingView charts, then I have to make it in like 13 different places. And if it's just within TradingView, I only have to do it in TradingView. But then I have NinjaTrader that I got to do it into, and I just don't want to get into that again. I've learned my lesson. I'm not doing that again. Good morning, Victor. So that is how you take the trial. Now, once you sign up for the trial, you got to have TradingView charts. I said that. If you don't have the TradingView charts yet, click on Getting Charts right here at targetviewtrades.com. Just click on this. The charts, to get the alerts, a lot of the stuff, like these alerts that triggered right here, to get the alerts, you have to have the essential to get the alerts. And to have custom range bars, I do almost everything on range bars. To have custom range bars, you have to do at least the essential. The basic one, the free basic one, has a 1 range, a 10 range, a 100 range, and a 1,000 range. Those are the range bars it has, and you can work with those. If you go for the free version, you can work with those. And I think you can have 1 indicator and 1 chart, and that works too. That's all you need. If you have the free version, you can do everything you need to do with the free version. You limit yourself a little bit. But this is how you get the charts, right? Sign up for this. And if you're going to trade futures, I know a lot of you guys are futures traders. If you're going to trade futures, you have to sign up for the futures data. All right. If you pay for it annually, this is what the cost is. I recommend you pay for it monthly, because they occasionally have really good deals. Like Labor Day, they'll probably have the next really good deal where they have like 70% off if you pay the annual at that point. So just pay the monthly for a few months, and then they'll have a really good sale, and then you'll be able to pay the annual, but with a really good discount. Okay, that's what I recommend for TradingView charts. I do have my own thing that I can give to you where I would get some coins or something like that, but I don't want to bother with that. Just go through this. You're going to get the best deals that they have available through this. That other thing, I don't think they give you the best deals. I mean, I get a little something out of it, but nothing worth, nothing worth you guys not getting the best deal. So that's how you get the charts. All right. So you do that. Come in here, click on setup. If you don't know how to set everything up, click on setup. Watch a setup video. It's all pretty straightforward. All right. In here, I have under TV trades and settings. I go through all the settings. Now I don't have the stuff in there for the sniper yet because I'm still working out the stuff for the sniper. It's still in beta. But the stuff that is not in beta is right in here. Okay. I just want to go through all that stuff for everybody. You got to get TradingView charts. You have to use TradingView charts. That's all there is to it. Now, let's get in here. This is what the chart looks like when you open it up with nothing on it, right? This is a YM100 range bar. A YM100 range bar. And what this hang on, I just got distracted. It's YM100 range bar, and so I don't have any indicators on here at all. Now if you have the free version, you can only put one indicator on, and hey, you only need one indicator. If you were to go here, just go into indicators, and you're in here right now, so you're interested in the beta version probably. I mean, you're gonna get the TV trades version. This is what the default version looks like when it loads up. I just clicked on it one time and it should be loading up here. There it is. That's what the default version looks like. When you just put it on, you don't do anything to it. This is what it looks like by default. And in here, if we go through all these things individually, I will at some point, but just to go through them quickly, it comes on with only long trades turned on, right? It doesn't have anything else checked off. It only has long trades turned on, right? All the other stuff in here, the default stuff is all you have. That's all there is. All right. Now I created this stuff. So if you start with Essential TradingView, that would be, yeah, that is fine. That is fine. Yep. And let me show you. There was one step that I skipped. Let me go back here for a second. You have to get data. Now, in the video right here, in the setup video, like 1 or 2 minutes into it, I show you how to get the data, but I'll show you right now. I'll show everybody right now. You come over here and you hover over this. Click on that. Go to. For me, it's TV trades. This is the ID you need to give me, by the way. If you hover over that, it says logged in. I'm logged in as TV trades. You'll be logged in as something else. Whatever you're logged in as is what you need to supply to me so I can enable things for you. But you go here, then go to account and billing, and we're going to leave this. It's fine. We'll come right back to it. You go to accounts and billing, and in here, you're going to have to click on get real-time data. Now the one thing that you need in real-time data is this one right here. If you're going to trade futures, you need to get this. CME, CBOT, COMEX, and NYMEX. It's $7 a month. Even if you're doing the trial, you can do it with delayed data, but you're never going to get the results that you'll see me getting or anything like that. It's $7 a month, and that's a great price for the data for all these exchanges. For real-time data for those exchanges, it's an awesome price. And that is, that's to the exchange. That's outside of TradingView and all that. They just give them a really good deal on it. So you will have to do that to get your data. Okay. So now we'll go back here. I'm going to go back to that blank chart. Probably. Yes. Back here to the blank chart. Now, I was saying if you drop this on here, the TV trades, this is the default TV trades. Okay. And originally I designed this for equities. I didn't design it for futures. I designed it for equities, but it turns out that it works well with everything. And then, due to the nature of futures is why I went into a lot of the other things, like the sniper and the mid-trend trades and things like that. But when you're talking about equities, you're talking about, if you're trading equities, really, you're buying a whole bunch of shares of like Nvidia or Tesla or whatever else. You want to get in at some place and you want to hold on to it. You want to know where to get in, and it tells you exactly where to get in. It tells you what your stop should be. It tells you what your stop value is in dollars and cents. It tells you what your targets are. All right, it gives you all your targets and all that stuff. And it's set up for long trades to begin with. All right, long trades to begin with. And That's because most people that are buying stocks are buying stocks. They're not selling stocks, right? They're not going short. But let me just throw this little caveat in there. If you wanted to buy puts, which means the downside is important to you, then you can turn on the shorts, right? Just do that. And it's going to turn on the shorts, right? So the red arrow is a short. If you get a red bar on a blue background, you're going to get a warning, a notice over here on the side. You'll get a notice that says there is a buy coming up or a sell coming up, whatever the case happens to be. Like here's the QQQ. I have some alerts set for that. It said in mid-trend trade, sell short. So and sell soon. Mid-trend trade, sell soon. So that was at 15:03. It said there was a short coming up on the QQQ 100 range. That was at 15:03 today. And then at 15:07, a few minutes later, it said to actually sell it. Right. So if we go look at the QQQ at 1500, I have no idea how that worked out. But if we just go look at it at 1500, it was saying, well, it wasn't this time frame, was it? It was on what range bar was it? It was 100 range. Okay, well, it said to sell short. Somewhere in here. It was a mid-trend trade. I don't have the mid-trend trades turned on. That's what the difference is. Okay, but it was saying right in here to sell short. Somewhere in here. It said right here on this bar, I think, to sell short. And so it went short a little ways. It didn't go very far, but it had a shorting opportunity right there. Now, I don't have the mid-trend trades turned on. That is right there. Okay, so that should show, there it is right in there. So these are all the mid-trend trades. Now, before I jump in too far into the mid-trend trades, let me just explain why they're there. I had people that were trading, and if they just have the long trades on, we'll say they just have the long trades on, and they have an opportunity like this one over here that says to go long, and this was on Monday, the 5th of August, it said to go long over here, and it has all these targets up here, 449, 449.2, 449.4, those are way up here. It has all those targets up there, right? If they miss this one, then they don't get another shot at it, until 2 days later. They don't get another shot at it until there. So they said, can I create something that would allow them to get in if they miss the first one, that would allow them to get into the trade? And that's where the mid-trend trades came up. Okay, so you just turn that on, and if you have the mid-trend trade selected, I mean the long arrow selected, it's only going to give you long mid-trend trade opportunities. All right, the ones that come with a little black arrow in front of them, like this, they give you a notice that the next bar could be a trade. All right, they give you a notice over here. I'll show you how to set up the alerts and all that stuff too. But they'll give you a notice that the next bar could be the trigger. All right. If the bar is the opposite color like that, you're going to get a notice over here on the side that you have a long trade coming up. Okay. That was the mid-trend trade stuff. That is just the basic stuff, the very basic stuff. Now, Joan, you had asked about if you were starting from scratch and brand newbie and you didn't know anything, what's the simplest thing to do? This is pretty darn simple. Okay, now this is on the QQQ, but if you do it on, we'll go back to the YM. Okay, now I know it's on 100 range, and I know you don't want to risk, $500 on a trade, because the stop on 100 range would have to be like 105, 110 ticks, something like that. So you'd be risking, $125 to $150 per trade, per contract. And I know you don't want to do that. But you can trade micros on this. And so instead of risking 105 or 110, you'd be risking 10 or 12 per contract. But you can trade, 3 or 4 of them. So, the wins work out to be something, and the stop outs are minimal. Okay. The micros, now, when they came out, the micros a couple of years ago, I really didn't do anything with them because nobody knew how to deal with them at the time. And the brokerages, they were new, and they were kind of ripping everybody off that was starting in with the micros. The commissions were too much for the micros, for the amount that you were gaining per tick. You had to trade a micro and hold on to it for like a day or two. You couldn't scalp micros. Not that I'm saying you would scalp with a 100 tick range, But you can get into it with 100 tick range and not hold on to it for hours, but hold on to it, for minutes, half an hour maybe, and make some money. Because now the commissions are they're way down there. They're like $1 now, or maybe less, all in round turn. And before they used to be like $3.50, $4, pretty much the same as what it was for a regular contract. And there was no way you're going to make money with that. But things have changed. The whole landscape has changed, and the micros are now a great tool. As a matter of fact, let me show you something that I showed this in last week's meeting, and I'll just show it to you again right here. This is the micro NQ. You see the liquidity down there at the bottom? And hang on a second. Let me get the regular NQ. Here it is. And this is the regular NQ. Alright, the micro NQ actually has more liquidity than the regular NQ does. So, you can trade, like I stopped trading the NQ this week because I trade 20 contracts at a time, and when you see these little tiny numbers like this, I think I made a screenshot of it at one point this morning, didn't I? Yeah, I did. When you see these little tiny numbers like this, with 20 contracts on, it's going to wipe out almost all of that whole size. So it's going to spread me from here to here. And that's if it's just me. That's just my order alone, is almost all that whole size. So everybody else that's trading is going to send my order like way down to here. It's going to spread it all the way out. So, this week, with all the volatility that we've had this week, the markets got really, really thin. So I stopped trading the NQ this week with 20 contracts, right? Because I'm on 20 contracts. This month is my 20 contract month. And I'm going to wrap up the month with 20 contracts. I'm not going to trade the NQ very often, unless I see a good reason to. But I wanted to point that out. The micros have come around. The commissions are cheap enough. You can trade 3 or 4 micros and still be making some pretty good money. In a single trade. My mantra, with what I've been doing for over a decade in this stuff, is have a goal that you can achieve every day. Set a goal that you can achieve every day, and just make that goal. All right, make that goal and be done trading. And I have a history. For those of you guys who don't know, I have a history of doing this. This is my history of doing this. Setting my goal to be $100 per contract, and just getting my $100 per contract this year. In this column right here, if you started out with $100 per contract and traded just like I did this year, you would now be on your 8th contract, because you're in the 8th month. You pretty much had 1 contract per month. You had 1 contract for every $2,000 in profit, and it works out to about 1 per month. So if you had 1 contract per month, you'd be at your 8th contract right now. You'd be up $81,461. That's just, doesn't matter what you're trading. $100 is the dollar amount. You could be trading the NQ, you could be trading the YM, you could be trading bonds, you could be trading the Russell, you could be trading whatever you want, crude oil, gold, whatever it is. The $100 per contract per day is what you're trying to get to. Okay, so far this year you'd be up $81,461, and if you did it just like me, you would have had to trade 47.5 hours so far this year. All right. Now, last year is when I actually started all this. I started at the beginning of last year. That's why I'm in my 20th month, my 20th contract, and so I'm actually averaging $6,945 an hour right now this year. But that's just working your way up slowly. All right, and that's what the whole idea is. You don't want to trade 1,000 times. You want to get in there and take 1, 2 good trades, make your money, and stop trading. Right now, there is opportunity to trade 1,000 times if that's what you want to do. If you want to make, if you want your goal to be a bigger goal than that, then there's definitely opportunity to trade more and more and more. And you're going to see when I put on the other stuff that I've created in here, it gives you so much opportunity to trade that it almost, it's almost mind-bending. And you said, ideally, you're thinking to start trade with a fixed risk, like 2 points a trade. That's perfect. On the ES or any futures market going against my entries, what would be the best setting in a range chart? Well, it depends how volatile the markets are. The last 2 days, the markets got really volatile, so these bigger range charts are good. You say 2 points a day on the ES, so you're risking $100 per day is what you want to risk, right? $100 per trade. And that spreadsheet that I just showed you is exactly that, all right? Well, for the ES, it's risking $125. It's risking 10 ticks. And I use a 7 range chart. for all this in here on the ES was a 7 range chart. And this, now the spreadsheet that I'm showing you goes back over 10 years. It's my daily results going back over 10 years. This is doing the stuff that I do in the morning though. This isn't necessarily with TV trades, but TV trades is actually easier to do. The results are very similar. It's just easier to do, easier to see. You don't have to learn how to trade with TV trades. You just have to put the trades on with TV trades. That other stuff you have to learn how to trade. So, yes, what time is it? 3:21. So I wanted to go through that. I wanted to make sure you guys understand, the whole thing that I want to discuss in here was the risk reward and how to manage a trade. Now, there's a bunch of different ways to do that, and there's a bunch of different things that I can show you. Now, the TV trades thing, again, you don't have to learn how to trade with TV trades, but I'm going to show you things that you'll be able to take with you that'll benefit you in the future, because I know how to trade. I trade for a living. That's why I keep coming up with new things, because I trade for a living and I created all this stuff. And as I see things, as I create new things, I want to share it with you guys, because it's easiest for me to do it in front of you and in front of people and use it and share it than it is for me to try to keep it secret and do one thing that I'm only going to show to you and then do another thing that I'm not going to show to you, and that just confuses me, and it's just, I can't get my head around that. So for me, when I figure new stuff out, it benefits all of us. So the risk reward, let's talk about that. All right, because you just said that you're thinking of starting to trade with two points risk, and your question is what range bar should you use? Well, let's look at that. Okay, let's not look at the YM, let's look at the ES, because you were talking about the ES, and I'll look at what I do every day with the ES. All right, this is the ES right now. I'm going to put it on a 7 range. Okay, now the reason it's on a 7 range is because the ES works in 4 points per tick. 4 ticks per point, and I use range bars. So with a 7 range, if you know where the bottom of the bar is, and you know a down close is going to be a trigger, you can put your order on ahead of time, exactly 2 points from the other end of the bar. Right, 8 ticks. We'll put your order on one. There'd be a sell stop limit or a buy stop limit order that you'd put on. Right, and it'd be 1 tick beyond where the bar is actually going to close, because you know ahead of time with a range bar where the bar is going to close. Guys, if I'm talking too fast, tell me. All right, I know I have a tendency, because I feel like I got to cram so much in this hour that I try to get it all out as fast as I can. Let me slow down and say that again. I'm going to take a drink. That'll make me slow down. Hang on. Okay. I'd like to draw a picture for you, but I don't know how to use the drawing tools with this new thing that they have. So I can use this and I can draw a picture for you here. Okay. So here, these are 7 tick range bars. Okay. And this bar right here has a high of 52.51. If I wanted to sell, if I knew a down close on this bar was going to trigger a trade, and you do get a notice ahead of time that tells you the next bar is probably going to be a trade. So if I knew that the next down close was probably going to be a trade, I would want to put a sell stop limit order below that bar where it's going to close, so I have the order there ahead of time. Okay. Alright. See the top of this bar, if you go right, the top of that bar is right there. Now I can draw with this stuff. Okay, so the top of the bar, if you go right, oh, I guess I can finish, goes over here, 52.51. Alright, so I know ahead of time that the top of that bar is 52.51, and I know it's a 7 tick range bar, so it's only going to be 7 ticks high. So I know the low of the bar is already in. This is the low of the bar right here. Right, that's 7 ticks below the top. So if I knew ahead of time that a down close was going to qualify as a trade, then I would put my order on ahead of time and have it waiting down there. And that's that's a sell stop limit order. You would just do this. For me, it's a right click in my DOM like that. That's a sell stop limit order. I would put my order on ahead of time and just have it waiting there. Okay, that's what I'd be doing. That's why I use range bars. And with the 7 range bar on the ES, my stop is 10 ticks. Alright, 10 ticks. So the stop is actually $125 per contract if you're using the big one. All right, if you're using the regular mini ES. If you're using the micro ES, the stop would be $12.50. Okay, that's how I do it. That's how I've been doing it for over a decade. Okay. If you want to do it on the ES, now the ES does get volatile some days recently, and if it does get volatile, just bump it up, bump up the range bar. That's what I did this morning, the last 2 days actually, with the YM and the YM and the Russell. I was trading those on a 7-tick range as well, but the last 2 days were really volatile, so I bumped. Today I was trading the YM and the Russell on a 19 range. Now, why a 19 range? Well, if you're trading the Russell, the Russell goes in increments of, it's 10 ticks per point. And if you're trading the Russell, if you're on a 19 range, it's going to be 2 points from the top or bottom of the bar. So it's just 2 points from wherever it is from the top or bottom of the bar. And the YM, each tick is a point. So it would be 20 points from the top or bottom of the bar. So it's easy to do the math. That's where putting with a 19 range, your sell stop or buy stop limit order is going to be one more than the range bar size. Okay, so it'd be a 20 range. 20 is where I want to put the order, not at 19, because it could get to 19 and not close at that end. But 20 means it did close at that end and it's gone on. Okay, so that is what I would do. Now, when it comes to risk reward, the bigger the range bar, the smaller the percentage of the range bar in additional risk I add. All right. So what that means is, like with the 7 range bar, for instance, I use a 10-tick stop. Now a 10-tick stop is about 40% of the size of the range bar, right? It's actually 30% more than the size of the range bar. Well, it's not really exactly. Let me just do the math, because this is going to bug me. I'm a math guy, and numbers, so it would be not 7 divided by 10, but 3 divided by 7. It's 42%. That's what it is. It's a bar length plus 42%. 1.42 bar lengths is what it is. But with like 100 range bar, I wouldn't use that. All right, with 100 range bar, I would use probably like just 10 ticks, maybe extra. So it'd only be 10% more. So the smaller the range bar, the more room I give it to move as far as the stop goes. But the bigger the range bar, the more likely it's going to be right at the pivot point. Like right here, you see some of these trades. Let me turn on something else so you can see some more trades. This does not have the sniper in it. Okay, but if you put the mid-trend trades on, you'll probably have a couple more trades showing in here. And you see these bars right here, they pull back like this far, right? And even this one pulled back this far. All these bars right here, they're making my point. All these bars right here pulled back almost a full bar length. This one did pull back a full bar length. So if you put your stop a little bit more than the bar length, in this case with the 7 range, I use 42%, apparently more than a 7 range bar, which is 10 ticks. So I use 10 tick stop on that, and it usually keeps you in the trade. And if it takes you out of the trade, it's usually because it's going the other direction. You don't want to risk any more than that. Now, these types of trades right here, the trigger, the stop is based upon the prior bar, the low of the prior bar. All right. For these types of trades, the mid-trend trades, you just got to have the stop be a little bit above the bar. All right. But for normal trades like the mid-trend trades, it should be on the pivot bar. And if you're talking about the sniper trades, those should be on pivot bars too. And the bigger the range bar, the closer to the pivot the trigger should be. Not the red arrows and blue arrows. They should happen like near the beginning of the trend, but they shouldn't be on a pivot. The mid-trend trades should be on a pivot. All right, they should be on a pivot. And the sniper, when I show you the sniper in a few minutes here, they should be on pivots too. So the bigger the range bar, the less risk you have beyond the bar. Like just a couple of ticks beyond the bar that got you into the trade should be enough. And if it's not, it's probably going to stop out anyway. Okay, like this one right here. It only went a little bit into profit down here, and then it pulled back and went through just a little bit. So if you had it just a little bit beyond, it would have stopped you out right here, and you wouldn't have had to risk all the way up to here. Okay? That's the way that I look at the risk-reward side of it. Well, the risk side of it. The reward side, well, that's a whole different thing. Let me explain to you. Let me draw another picture. Let me grab another picture of something here. I'll do the whole thing. All right. Now the reward side of it. Blow this up. Now the market's always doing the same thing, right? Now a lot of you guys that have been with me for a long time, you know I say this all the time. And the market's always going up and down and up and down and up and down until they go up, and then they go up a little deeper. The leg up gets bigger, and the leg down suddenly gets shorter, like that. And then usually what's going to happen is it's going to bounce around in here a little bit, and then eventually it's going to take off and make a leg back up and go this way, right? And then as the legs up get smaller, and the legs down get bigger, you're losing strength in the trend, and they start going the other way. Okay? That's the way the price works all the time. So the idea between these triggers that get you into the pivot, this is the pivot, this is the pivot, this is the pivot, and when you're going down, this is the pivot, and this is the pivot, and this is the pivot. And as long as price keeps going down, your targets, the minimum that it should do is get to those levels right there, right? And if it doesn't get to those levels, well, then you're in a weak trend. The trend is ending, and it's probably going to turn around and go the other way. Okay? That is how risk reward works. Now, this is what you should expect out of each trade minimum. The targets that you get in here, they go beyond this stuff. All right, they go beyond that because they're looking at support and resistance levels that have been created by price action in the past. This is looking at the most recent support and resistance level that has been created by price action. The targets they usually go beyond the most recent one. Sometimes it is the most recent one, sometimes it's right on top of it and it's the most recent one, but a lot of times it goes beyond that very one. Okay? But so when you get into a trade, that's the minimum that you should expect out of a trade, no matter what you're trading. Right? That's the minimum you should expect. And all these targets, they're built on what price has already done. In here we can put the thing that actually builds the targets. You can actually put that on the chart so you can see it. If you draw these labels right here, you can put it on the chart so you can see what it's looking back to find. Like right in here, if you go to the end. So we had this short right here, and it says the first target on that, target number 1, 52.36.25. It's right here, right? The next one is there. The next one is there. And if we added more, it'd be this one, and then whatever's below that, as it goes back further. You can have up to 5 targets, but that's the way that it works. Okay, and all this stuff is all automated for you, so you don't have to really think about it. It's all there for you. Okay, you have all the targets put in there. You don't have to really think about this, but the title of this one was Risk Reward in Trade Management. And so I just wanted to go through some basic things that everybody should know. Every trader should understand some basic things about trading. When you get into a trade, you have a defined risk, the amount of money that you're going to risk per trade. And in here, this is the ES. In here it says how many points. Now on 100 range ES, that's going to be way too much for you to want to risk. All right, because it gives the number of points, 48 points on the ES. It's $2,400 with a single contract, isn't it? No, 50 points is 1,000, so it's almost $1,000 with a single contract. No, 20 points is. I'm sorry, 20 points. Yeah, I was right. $2,400 is what it is roughly. And you're not going to want to risk that. But if you had a micro on, it'd be $24. Or actually, no, for this it'd be 48. It's 125 per tick. So those are points, though. Those are points. Yeah, so it's right. It'd be $28, whatever it is, or $280 for that many points. It'd be 1/10 of what the other one was. $280, I think, is what it would be. Now, that may be more than you want to risk too. So on on the ES, you probably don't want to put the S on 100 range. You want to keep the S down to something smaller. If you're going to go with the micros, you probably want to do that on something smaller. And you want to do it on when I use range bars for the ES and for anything that's got 4 ticks per point, 4 ticks per point. Anything that's got 4 ticks per point. Do something, a range bar that is a multiple of 4 minus 1. Okay, like a 31 range. 32 is the multiple of 4 minus 1. Why? Because 8 times 4 is 32. So if you're in a trade that you know is going to give you the, if you're in a bar that you know is going to give you the trigger, it's 8 points from the top or bottom of the bar that you have to put your buy or sell stop limit order. Okay. So I know this is a lot of fundamental stuff, probably a lot of technical stuff, but it's something that all traders should understand. You know, getting into the trade, understanding what you're doing when you get into the trade. You know, we give you great entries here. Like, I mean, just look at this. This is a 31 range, and look at all these beautiful trades that it gave. The stop on this would have been up here, so that was a nice win. The stop on this would have been up here, so that was a nice win. The stop on this would have been up here, another nice win. The stop on this would have been up here, another nice win. And then it changed directions. The stop on this would have been right here, and it stopped out. You don't trade in that direction anymore. Okay? It's as simple as that. And remember what I just said a few minutes ago about the way a price works, going up and down and up and down and up and down. Well, that's exactly what we did here. Down, up, down, up, down, up, down. Then when we pulled up, we pulled too deep right here to want to go short anymore. And it triggered the long trade anyway to stop you from wanting to go short. The long trade, the stop would have been right here on this, so it was a small stop. See right here, the stop, well, 13 points. But that's on a 31 range. It's not a big stop. It's a small stop considering the range bar that you're using. And so now what I would expect here is it's going to try to go long a little bit here. Now, if this didn't make it, I wouldn't be taking anything else that's below that. Now, if this did work out, then I would look for mid-trend trades that are still going in that direction. But if this first one does not work out, then the mid-trend trades are not likely to work out either. All right, so that is just you're not getting the black triangles on your chart. Is there something you need to do? Jenny, you gotta, these black triangles, do you have the mid-trend trades turned on? Do you have those turned on? And in here, do you have these things turned on? They should be on by default, I think. We gotta make sure those are turned on. Okay, and this is a 31 range ES. Okay, so you gotta, by default, you gotta have the mid-trend trade turned on, and that's gonna give you the purple arrows, the fuchsia arrows. I'm sorry, not purple. Fuchsia arrows and the green arrows, and the black diamond and the black triangles. They don't always appear. You know, when I created the mid-trend trade, I was so excited because I figured something out that I'd put the first one out when I first figured it out, and then I was trying to find a way to give you guys a notice that you're having the mid-trend trade, and then I figured out another really good mid-trend trade formula that I could have the notice on. So I created the second mid-trend trade formula. So there's actually two different formulas that produce these, and one of them allows me to give you a notice ahead of time that the trade is coming up, and the other one doesn't. So you see some of them have the black arrow and some of them don't. The black arrow is not always followed by a trade. It says the next trade could be a trade setup. Okay. Alright, you got them now. Good. So this is pretty easy stuff. Jenny, you would ask me, you know, you don't need any indicators on the chart. My whole deal with this is you don't have any indicators on the chart. Right? The stuff that you've been doing with us for years in the morning, you have all the indicators on the chart. You know, it looks like it's got a whole bunch of stuff going on. And, you know, and that's just the way it is. It's, if we go here and we go to videos on this page, videos, it's got all this stuff going on the chart, right? You don't have any indicators on this chart, and I'm going to keep it that way. There's no indicators on this chart, and I want to keep it so there are no indicators. You know, I can show you some things just to give you an idea of what makes things trigger, but I don't want to put anything on the chart, because when you start seeing things on the chart, it makes you second guess. I want you to just see the arrow and take whatever action the arrow says to do. Right? It gives you all the information you need. It gives you the entry, it gives you the stop, it gives you the targets, it gives you everything you need. It even gives you a risk-reward ratio. If you turn the risk-reward on, it'll give you a risk-reward ratio if you want it. Okay? There it is, risk-reward. A risk-reward of 1 or greater is good. Alright, so this last long trade had a great risk-reward, and it just didn't work out. But if you go, you can't do a replay on range bars, but if you do it on like a 5-minute bar, you can go back and see, like this one right here was the risk. Oops, this was a risk reward for this red arrow back here. Any risk reward 1 or greater is good. All right. It says exactly what it does in here. If you click on this, these little things, these little eyes, I wrote descriptions on every one of those little eyes so you understand what everything does. All right. Every one of these things that I actually put an eye on, it tells you what it does. Okay. Like this one down here, this is an error about time. Every now and then you get an error in here and your indicators won't show. If you decrease the number of that, then they'll usually pop back up. A lot of times if you just turn the indicator off and back on, it'll pop up too. Working on a fix for that. It doesn't happen very often, but that's in a nutshell. That is the TV trades that we have, and the risk reward stuff. I really didn't get into the reward too much. There's a thing I have called the diamond principle. All right. Now the reward part, we have the targets all listed in the table for you to help with that. All right. Now, the diamond principle is something that I created. It's a term that I coined. And those of you guys that have been working with me in the morning, you know what I'm talking about. But, the market, when I drew that picture for you, let me bring that picture back up. When the market does this bit right here where it pulls down, it goes back up. It's the beginning of the diamond, right? So, price, when it creates this space right here, that space right there, it defines that space. When it completes the trend, it should duplicate that space, right? Why? Well, because the leg length should duplicate itself again and again. It should exceed, when you're in a strong trend, you should have the first leg length, then a pullback, and then next leg length should be equal or greater, and then a pullback, and then next leg length should be equal or greater, and then a pullback, and then next leg length, if it weakens, is going to be smaller. And then a pullback may be greater. Okay? But when you're in a strong trend, this stuff right here, where the price has gone up and pulled back, this is what should happen again. This right here. To make that happen again, it should be something like that, right? So you're expecting it to get to this level at a minimum. When you enter down here at the pivot, you're expecting it to get to there at a minimum. But when it does get there, you're actually expecting it to go through there because it should duplicate this. And if it does, this is how far it should go. This distance that was established, this distance right here that was established by the pullback should get duplicated right here and get up to there, and that completes the diamond. All right. Now the way that it works out, that usually ends up being over here somewhere, because price is going to pull back and then it's going to go up like this and up like this, and then it might pull back again right in here, and you might get a second entry right there, and eventually it's going to get up to that level. That's the way that price works, again and again and again, over and over and over again. Okay, it's the same thing. The markets always do the same thing. They go up, they consolidate, they go down. Sometimes they go up and then they go right back down. Sometimes they go down and go right back up. But they're either going up or they're consolidating. They're going up or down or consolidating. There's only 3 directions they can go. And so if you know what you're looking for, then you know what to expect out of a trade. Okay? The indicators, the tool, is going to get you in at these great spots over and over and over. And this is just random stuff from today. I didn't make this up. I didn't cherry pick this. This is just random stuff from today that I just chose. Not everyone's going to be a winner. This was not a winner. This one right here was not a winner. Not everyone's going to be a winner. But that is just the way that the markets are. That's the way the markets work, and it's the way they always work. They always have worked, and they always will work. Now, let me go through one more thing in here because I haven't even done anything with the sniper yet. I'm 3:45. Crap. There's one other thing in here. When you're trading futures, particularly when you're trading futures, you're going to get into spaces where you're going to have in the smaller time frames, you're going to get into spaces where you're going to have things like this, right, back and forth against each other. I created a thing in here that you can use so you're staying on one side of the market. It's called the bias level. And what this does is it puts like an invisible moving average on the chart. And it says if you're above this moving average, you're only going to get long trades. If you're below it, you're only going to get short trades. So right now it's set to 233. It's a simple moving average set to 233. So if I were to put one on here, this is what it looks like, okay? I'll go down here to moving average simple, right here. And this is a 9 moving average that it puts on by default. So if you go in here and we change that to a 233, okay, there's a 233 moving average. Now it's way up here. Oops, it's way up here. So you see it's only giving short trades below it. It's not giving any long trades below it. Alright. Now I have long trades selected. See, I have them selected. So if you had any long trades, like right here, and you're above it, it will give them. So that's called the bias line. So Joan, you see how easy this is, right? You don't need to go and learn anything else. You don't need to have any other tools. You don't need anything. All the stuff that I've been teaching you for the last 5 years, and everybody else, it all applies. You just apply it. And that's just using this stuff. This is the mid-trend trade. The purple, the purple ones, the fuchsia and the green ones are mid-trend trades, and the red and blue ones are the regular long and short trades that occur near the beginning of the trend. All right, the stuff that is in the table is only based upon the last either red or blue bar. Not red or blue bar, the red or blue arrow. All right, if you don't have the red or blue arrows, you're not going to have a table. Okay, so that brings me to the beta version. All right, now I'm going to shut this version off and just turn the beta version on. I'm actually going to take the beta version off of here so it's the very latest that you guys have available to yourselves. Alright, so here's the beta version. And it turns on just like the other one. Has the same stuff turned on in here, but it's got more stuff. Alright, now the table, again, is based upon the last blue or red arrow. We only have blue arrows turned on here, so you're only going to have tables with long targets on it. Alright, if I shut this off and I put this one on, that's going to, you'll see it in a second, you're only going to have tables with short targets on it. Okay? Now, the bias level that I just showed you is for those and for the mid-trend trades. This bias level is for those and for the mid-trend trades. For the sniper, I created another bias level that is always on for the sniper. Okay? And hang on. Mark, you switched to trading futures sim on Trade08. You can't seem to figure out range bars, but canvas are working well. Okay. Send me a picture of what you can't figure out, and maybe you can set up a meeting, Mark, and I can help you out with that. Okay. I think I made a video about them. I can send you that too. Bobby, I'm going to make some changes next month that will make this more appropriate for minute charts rather than range bar charts. I thought you alluded to that in a partners meeting last week. Bobby, the partners meeting stuff that I was alluding to last week has nothing to do with TV trades. I am going to make some stuff, but it's not going to be, it's going to be a mix of things. The TV trade stuff, of course, is TV trades. You can see, obviously, that some things are overlapping, but there are no indicators showing on these charts. All right, Bobby? There are no indicators showing on these charts where the other one has just a ton of indicators on it. Joel, I do not do win rates. I do, how much money you make. I don't really care what the win rate is. I know the win rate is really good, but at the end of the day, how much money did I make? At the end of the day, that's all that matters. Did I get my goal for the day? That's all that really matters. When you're talking about win rate, you're talking about wanting to have a whole bunch of trades that has, like you win 9 out of 10 trades. I don't want to take 10 trades. I want to take 1 trade. I want to take 2 trades. I don't want to take 10 trades. If you want to take 10 trades, go ahead and take 10 trades. And win rate will be good. I don't know what it is, but it will be good. But again, when you're talking about a win rate, there's a thing called the Kelly criteria, and with that, you're talking about the amount you make on each winning trade versus the amount you lose on each losing trade. And the way that I do things when it comes to that, and we're talking about risk reward, so this is actually a good criteria. It's a good transition. I like to have predetermined stops on all my trades. If I'm using range bars, I know ahead of time what the stop is going to be on every single trade before I get into the trade. Okay. so I know what the risk is going to be on every trade. And if I get into a situation where the risk reward is not in my favor, then I just won't take the trade. There's always going to be a better trade, right? You don't have to take trades like that. So the win rate, I don't know what the win rate is. I mean, you can just go back and look yourself and see what the win rate is if you want to. I don't think that's really a good use of time. I mean, it's something that you're going to want to do. I know in the beginning you're going to want to do that because, you know, you're going to want to see, well, how can I trust this is what you have to do. And in the beginning, that's what you got to do. You got to trust it, and you got to build confidence in the system. And I understand that that's why you want me to say, you know, there's a 98% win rate. I'm not going to give you any crap like that. I'm not. I mean, it's, you know, I actually have a broker's license, and I'm not allowed to say anything like that. That is, you know, I'm not allowed to say anything like that. I can tell you that, you know, that I make money with it every single day, and that I have a goal that I have achieved. You know, so far this year, I have achieved my goal. These numbers right here. So far this year, I've got my goal in 146 out of 146 days. I've gone 308 days since my last negative day. Well, not my last negative day, but 308 days since I didn't get my goal for the day. Right? 308 business days since I didn't get my goal for the day. That was the last time I didn't get my goal. So that was in July of last year, I think. So that's the kind of information that's important to me. You know, how much money do you make and how consistent are you? Right? Isn't that more important, Joel? I think it is. You can go through and do the win rate stuff if you want to. You know what? You can. I haven't even shown you the sniper stuff, but you can. When I put the sniper stuff on here, you're going to see a ton of trades, and I'll put it on right now. I'll just put. This is just the conservative sniper. Is this one right here? All right. This is a conservative sniper, and well, right here, it's got this by default. The sniper has the bias level on by default. So below the 233, it's only going to give shorts, and above the 233, it's only going to give longs. So back here, you know, where it's above it, you get some long trades. That's the conservative sniper. All right. Now that is good. That is good, and it gives some really good trades in there. And it's not always going to be, you know, the background color is not always going to be the same. Right? It's not always going to be the same in there. But no, I mean, so you could have a short trade on a blue background like this one right here, where normally you would only have short trades on red backgrounds and long trades on blue backgrounds. You could take the background color right off because it's not really significant. You can take it right off if you want. In here, it's going to be under style and buy sell area because it's not really that significant. You know, neither is the bar color for that matter. But this is a conservative one. Now, if you throw on the aggressive guy, let's shut off the conservative one and just put the aggressive one on. Okay. And now you got a lot more trades coming at you. And, you know, this, Joel, is where you might want to look and say, okay, well, all right, well, let's see. Let's just go to the end of this chart right here. We'll say, how many trades do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trades. 13 trades. And that one's a winner, that one's a winner, that one's a winner. And that one would have stopped you out. So that's 1, 2, 3, 3 out of 4, 4 out of 5, 5 out of 6, 6 out of 7, 6 out of 8, 7 out of 9, 7 out of 10, 8 out of 11, 9 out of 12, and 10 out of 13. In this span right here, 10 out of 13. Okay? But if you just set your goal for the day, you need probably one of these. You know, one or two. And if you stop out, if you hit all three of those stop outs, you know, you have every one of these other ones to make it back. Okay, so this is, you know, and this, I didn't cherry pick this, you know. You can do whatever. Please explain the difference between the black arrows versus the blue and red arrows. Alright, these black arrows are for the sniper. Alright, in the sniper, the risk reward, this is something we should go over with the sniper. In the risk reward on the snipers are not usually going to be on the pivot bar, they're going to be right after the pivot bar usually. But your stop just needs to be a little bit above the bar that got you into the trade, because you're usually going to be in the direction of the trade by the time the sniper triggers. You're usually going to be in the direction of the trade. You're going to have momentum behind you a little bit. Alright, you're not looking to go right at the pivot. You're going to have a little bit of momentum behind you, so you're looking to go right after the pivot and jump in the flow right after the pivot. That's what the sniper is. Alright, you take aim, make sure the wind is with you, and you go. The difference between these happen a lot more often. No matter what time frame you use, this is going to happen more often than any of the other ones. The other ones happen closer to the beginning of the trend. These happen mostly in the middle of the trend. Okay, they don't necessarily happen right at the beginning of the trend. They can happen right at the beginning of the trend, but they happen mostly in the middle of the trend. The question for those of you guys who don't know is, please explain the difference in the black arrows versus the blue and red arrows. Now, you see this little black dot right here? That is the target table. You're not going to have anything in the target table unless you have the blue or the red arrows on. So right here, clearly the bias is bearish right here. So if you wanted to have targets on the downside, flip on the red arrow, and it'll populate the target table for you. Okay? So now whenever you get into one of these things, you have the targets already defined for you. Okay? And if the bias happens to be to the upside, we'll go back here where we're getting some bullish ones. All these right here where it's bullish, come in here and shut the shorts off and flip on the longs. Right? And now you get all the targets on the upside. Remember, the target table comes from the last blue or red arrow is where the targets are established. So you have all these opportunities, and again, this is just a random spot right here. So you can use the targets even when trading the blackouts. Yes, absolutely. The targets are there for any trade that you get into in that direction. The targets are there for that. And this is by default. I put 3 targets up here. You can make it go up to 5. You can make it have just 1. You can also make it put the lines out. Now, I got a call today about there being a bug in the lines. I'll have to take a look at that, but that's going to show all the way at the end. The lines, the target lines. Okay, so it's going to show from this last blue arrow here. It's shown from the last blue arrow. So in this case right here, it's showing long targets, but we're below the bias here. So when looking at short targets we're looking at short trades because all the black arrows are down. So you'd want to have this thing pointing down. Do this one. And so it'll show the short targets now, and see the lines are right there. So you can have the target lines there defined for you. From the last red arrow is what defines those targets. Right, is what prints those targets out for you anyway. Okay. And Janie, there's so much more stuff. I mean, if you guys you're active in both of the things that I do, both of the businesses that I do, if you're active in both of the businesses that I do, you're in like a perfect spot, because there's stuff that's going to be mixed up in there that having both is going to be a great advantage to you. This is great all by itself. You don't have to learn anything. All this stuff that I'm telling you right now is just good to know information. You don't have to learn anything. You just have to know how to turn the stuff on and do what it says to do. Right? That was the whole idea behind target view trades. You don't have any indicators. I don't want you to have any indicators on the chart, because indicators are what make you think twice. And I don't want you to think twice. I want you to see a trade and take the trade. See a trade and take the trade. And if you stop out 2 or 3 times in a row, maybe it's not in a good space. Don't trade for a half an hour. Usually that's not going to be the case, but again, you're working toward retirement. Okay, Bobby. Well, hopefully this will help get you there. We're all working toward retirement, aren't we? It's funny. I was in an event for Macy, some big girly thing at a golf course and country club crap. And this one guy came up and he said, he's semi-retired, and You know, he likes to play golf, and you know, I'm not a real big golfer. I played golf once in the 10 years that I've been down here. I'm up, yeah, down here in North Carolina, and that was just a couple weeks ago. It's not that I don't like playing golf. It's just that it takes up so much time, and my mind can't sit still for that long. But he said he was semi-retired, and I was thinking about it. I didn't really think about it at the time. You know, like I only work a few hours a day, but then I help people the rest of the time. But I've been semi-retired for 12 years. If you think about it that way, semi-retired means you don't work a full-time job, right? So, oh, thanks, Jenny. I hope to stay dry. The boat is put up and covered, so I'm not worried about that. Same to you, all you guys. You know, the storm that's coming through. It's actually coming through here now. I don't know if it's already gone through your area. All right. So it's 4 o'clock, guys. I want to answer all your questions, so I want to make sure. Is Sniper? Yeah. If you don't have the Sniper is in a beta version, Bobby. I thought I enabled that for you. It's in the beta version. Okay. If you're on the trial, just send me an email. Send an email to support@targetviewtrades.com. Put your TradingView login ID. This ID right here, and Sniper in the header of the email. That's all you have to do. Put that in the header, and I'll turn it on for you. I'll make sure you have the beta version. Okay, it's in the beta version, and it's really easy to turn on. You know, you should have nothing else on though. You know, if you're going to go for short trades, if you're looking for the short arrows only, then only have the short arrows on. All right, so it doesn't put a whole bunch of other things on here. Don't turn the mid-trend trades on with it. You don't have to enable this bias level. That's not going to change anything for these Sniper arrows. That will change things for these red arrows, but it won't change things for these Sniper arrows. Okay, the Sniper bias is always on by default, and it works on the same principle. It's only going to show things under the 233 or above the 233, and you can change that however you want. You know I have Rico, who may be in here right now. Uses a 50 on that, I think, because he likes very short, quick trades. I didn't show you. You know, you can move this box all around. You can move it here, over here. You can move it down here, or here, or here. It has 9 positions. This one, this one, and this one, this one, this one, and this one, this one, this one, and this one. It has 9 positions you can move it around to. I didn't show you how to put the alerts on. To do the alerts, all you have to do is come in here and grab whatever one it is, like TV Trades Beta. And if you want to put an alert on, you can have the Sniper alerts. I made those in here now. You saw some of those popping up over here. To put an alert on, you just click on like Sniper Long, and then whatever time frame you have it on. This is the ES15 range. Click on once per bar close, and in here you can type in ES15R, and in here click on notifications. This is going to show you how you get notified. Like this will pop up on my phone, and I'll show you what it looks like on my phone if I can find one that I did here fairly recently. Hang on, I'm sure I have one here. Here it is. This is what it looks like on my phone when it pops up on my phone. Okay, it tells you that you have a trade coming up or that the condition was met, so you know you can get to your desk and put the trade on. You can have it send you an email if you want to. You can have it play sound on your speakers or in your headset if you want to. Those are all different things that you can do for the notifications. And again, the notifications, they're in here for the Sniper Long, the Sniper Short, the Aggressive Sniper Long, and the Aggressive Sniper Short. Those are the black arrows. The mid-trend trade by advanced notice, that lets you know ahead of time if you can have a trade coming up, and the sell. The buy alert and the sell alert for the mid-trend trade. I'm sorry, the buy alert for the mid-trend trade, and for the buy alert, this is your blue arrow, and this is the mid-trend trade arrow. This is your red arrow. The sell alert is your red arrow, and this is the mid-trend trade fuchsia arrow, I believe it is. The sell advanced notice, this is going to give you a notice for the red arrow. It's going to give you a notice ahead of time for the red arrow, and the buy advanced notice is going to give you a notice ahead of time for the blue arrow. Alright, you just have to select whichever one of those you want. Make sure you choose once per bar close, and right down here type in whatever range it is that you're working on and what symbol it is, and then it'll look like this over here. Okay, like if I take this one, let me go to actual alerts. If I take this one right here, you see right here it says Aggressive Snipe Short coming up. It doesn't say what range it is, so if I type in here ES15R, you can see it just added it right here at the top. Alright, if you want to see it in bold, type it in here, ES15R. And you see it added in bold in a separate line above it, right there. Okay. Bobby, you are subscribed. Okay, good. You do have it. That's good. You think a few trade notifications, but good trade for best risk to reward. That's your goal. Okay, well, you know, if you haven't taken the trial, take the trial. All right, you get 3 days for free. It's absolutely free for 3 days. And even if you let it go beyond the trial, you know, there's a weekly one that's only $25. You know, that's not even the cost of a large pizza anymore. It's definitely not a tank of gas. If you go for the monthly one, so you have a whole month to play with it, that's about a tank of gas now. But take the trial. Go out to targetviewtrades.com and take the trial. If you haven't taken the trial, just get out there and take the trial. All right. It's a simple process. You got to give me a TradingView login ID, and if you do that, then I can help you. I can get you going. All right, get you going today. Get you going within the next hour. I want to tell you all again. This recording, I'm recording this, and when it's done, it'll be sent an email. Go to webinar. It automatically sends out emails, and I'll have a link in the email. A follow-up email, but it'll also be here on this page. This was last week's meeting, and this one will be here at the top of this page right here. Okay, so go to targetviewtrades.com, and it's going to be right here. Click on TV Trades web recordings. It'll be up there. Okay. All right. Few trade notification, but good trade for best risk to reward ratio. Yeah, there's a ton of opportunity. All right. I created this so that it helps me trade as much as it helps you trade. Okay, and I'm going to keep working on things to get you the best entries possible. This one right here, the sniper, it comes after the pivot. I actually have one that comes right on the pivot too, but I'm not sure I want to distribute that because it's going to be so many trades. It's so much now. You know, when I first created this, I didn't want it to be complicated. I didn't want it to be too much stuff. But you guys keep asking for things, and I keep creating it. So, you know, originally it was just like 4 things in here. It was just like 4 things on this. It wasn't even all this stuff down at the bottom. It was just like 4 things. And if you go look at some of the original videos that I created, you know, back in January, there's just like 4 things on here. It was not a lot, and I didn't have a table, and I didn't have the lines, and I didn't have multiple arrows. It's come a long way in a very short amount of time. Mostly because you guys ask for it, and you know, when you ask for things, it kind of makes me want to find things, and when I'm looking for things, then I just, you know, if I find ways that are going to help us all, and I can create it and I can give it to you, then I do. And that's why this went from being just 4 little things in here, just 4 little things, to all this and all this. And you know, I haven't even gotten into the hot tips and all that stuff. The hot tips for the mid-trend trades. The hot tips, what they are for, they're for the mid-trend trades and for these guys, the red and blue ones, and for the mid-trend trades. And if you get a hot tip like that, what it suggests is if you get an opportunity with a hot tip, a white hot tip like that, the trade should run a little longer than, you know, you should expect a little more out of that trade. As far as setting goals and targets and the risk reward, when you get a hot tip, usually you're going to get a little bit more out of those trades. Okay, they're going to be at the beginning of usually a good run. That's what the hot tips are about. Right? I've run over, but I ran out of time. I knew I was going to run out of time. I always run out of time. I'll be doing it again next week. Okay, if you want to take the trial right now, we get you set up today, we'll get you going, and then, you know, any questions you have, you can email me over the week, and I can answer them next week during the meeting next week, or, you know, I'll answer them in emails too. And that's it, guys. All right. Let me just, I'm not sure who's left in here now. I've gone over a little bit, and I don't normally go over, but I just wanted to make sure that everybody who's in here understands everything that's going on. And there. All right. I am going to wrap it up. All right. Thank you all for coming. If you have any questions, email support@targetviewtrades.com. If you haven't taken the trial, come over here and take the trial. If you have already taken the trial and you decided not to do it and you want to take the trial again, just go ahead and take the trial again. I'm fine with that. Don't take like 5 trials in a month, alright? I'm not fine with that. Because every time you take a trial, then there's some back end work that I have to do every time. So just don't abuse it. I'm not saying anybody would, but just don't. I'll know. I'll know, and I'll just say you're not taking a trial. I'm not giving you a trial anymore. But if you have taken it in the past and you want to take a look at it now, because like this is different than what we had 4 months ago. We have more stuff now than we had 4 months ago. Go ahead and sign up again if you want to. All right. And that's it. That is it, guys. I'm gonna wrap it up. And thank you all for coming today and giving me this hour. And again, if you have any questions, email support@targetviewtrades.com. All right.